Well, good morning, Facebook family. It's a great Thursday here in the state of Georgia. And here I am once again providing you with more sound information to help you be on your way to home ownership. Now, this week we've been covering the credit piece. And this is going to be our final day covering, the basics of the credit piece. Because you remember at the beginning, I said that there's two elements that we must address in order to be successfully able to purchase a home. We must have great credit, and then we must have assets, money to put down to carry the expenses of purchasing a home. And contrary to the myths, you do have to have money to buy a house. I know all these infomercials may say you can buy houses with no money and yada, 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 but you have to have money. So we'll address that next week. But today, the final piece of our credit for this week. And if you have more questions on credit, inbox me, call me, reach out to me. I'll be happy to answer any question that you may have. But we're going to talk about today the components of credit, the main components of credit. Credit is based on layers, but we're going to talk about the main components. And when I think about components, I think about what components are. Components are some key things that's combined together that make up the whole picture of things. So if I'm talking about credit, these will be things that we will need to create the whole picture of how credit works in buying a house. And I don't know about you guys. I'm old, but I remember when my mother used to say this right here. And if you remember this, like our comment, my mother used to say, she used to call a stereo a component set. And I used to always wonder, why did she call it a component set? I called it a radio or a stereo, but now I know why. A component set. It was basically telling you that the stereo as a whole could not work if all of the components was not together. There was the record player, there was the amplifier that controlled the tuning and the volume, and then there was a tape deck. But all of that had to work in conjunction for you to get a sound. So that's how credit works. What I'm about to tell you about today must work in conjunction in order to get you to that place you're trying to get, and that's home ownership. And I'm here to help you with that. But also, components are very key, because I read a book by I think his name was Robert Schuller, and he said something very, 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 very interesting. He said that problems are not meant to be stop signs, but they are meant to be guidelines. I'll say that again. Problems are not meant to be stop signs. They are meant to be guidelines. What are you saying? What are you saying? Problems arise in life. Credit problems, all other problems. They come into your life not to have you to stop in life, not to have you halt what you're pursuing, but they come into your life as guidelines on what not to do. Yes, that's right. Guidelines on what not to do based on what you have been doing. So whatever you've been doing pertaining to your credit, my goal is to turn you in the right direction. I don't want you to get off on that exit to nowhere, but we want to keep you on the highway to your destiny. So the two components that I'm going to talk about today, the two components are, number one, we're going to talk about the two layers of credit. One is the installment accounts that you have on your credit, and the other is what we call revolving accounts. We're going to start with installments because revolving has a great deal of weight as it pertains to credit score. So we're going to talk about installment accounts first. Installment accounts are accounts that you get from creditors that you have a certain period of time to pay it off, and it's itemized interest each month with your payment. And at the end of that term, when you make that last payment, that credit ceases to exist. That account closes and it is gone. Now, let me give you some examples of the installment accounts. The greatest example of installment accounts that everybody can identify with is a car payment, a car note, a car loan. That's an installment account. When you pay for that car 3, 4, 5, 6 years, however the length of the terms are, your account is over. And if you want another car, you have to start over with a different loan and go through the whole process again. And then we have a mortgage account. A mortgage is what we call an installment account. Installment accounts have an expiration on it, and that credit ceases to exist once you're done. Now, it's important that you recognize installment accounts, because installment accounts affect your credit. When you have installment accounts, the best way for it to reflect in your favor is to pay it on time. Listen to me. It's to pay it on time. If it's due on the first, pay it on the first. If it's due on the 15th, pay it on the 15th. You don't want installment accounts to get behind because it will negatively affect your credit. Because in essence, when you got the money and when you got the car, when you got the house, you told the creditor, look, I will pay you on this day every month until I'm done with you. That's why this affects your credit report. And you know, some people say, well, if it's not 30 days late, they don't report it. Why take that risk? Why take that risk when your credit is the most important factor of you moving forward in life? Not only for buying a house, purchasing a car, helping your kids sign for student loans, whatever. Credit affects all areas of life. But those are what we call installment accounts. But this next one is I'm about to talk about. It really has a bearing on credit score and how credit scores build. We're going to talk about revolving accounts. Simply, a revolving account is just what it says. It's an account that when you pay it off, it revolves back to you and you're able to reuse the credit again. I will say that again. It's an account that you establish and it can revolve back to you as you pay it off. That means it's available to you again when you pay it off. Unlike installment accounts, it's done. Credit is done. You have to start over. But with a revolving account, the credit is always available to you. Let me give you some examples of revolving accounts. The greatest example of all time, credit cards. Credit cards are what we call revolving accounts. Because think about it. When you pay your credit card off, it doesn't close. You can use it again, pay it off, use it again. It's revolving account. Another great example of a revolving account that you may identify with, most furniture stores put you on a revolving account. If you go in and buy a living room suite, you can go back after you pay it off and they'll give you that credit right back. Revolving accounts. And lines of credits. You got business owners out there who have obtained lines of credits to run businesses, or you have gotten a home equity line. Those are what we call revolving accounts. Now, let me tell you a little bit about revolving accounts. Revolving accounts weigh heavily at credit bureaus for scoring because this is their best way to tell how you use and be responsible for credit that's always available to you. Now, I'm going to tell you right now that we have to lose that myth that once I get a credit card, I need to max it out. That is erroneous. Don't do that. It's killing your credit. It is causing your utilization rate to be high. Basically, they want to see how you utilize credit that you have access to at all times. Don't max out your utilization rate because it will hurt you in the end. So I'll tell you what to do with credit cards. Simple thing with any revolving account, especially credit cards. What you need to do is always keep your credit card balances 30% or below what your entire credit is for. I'll say that again. Always keep it 30% or below what your entire balance is. Let me give you an example. If you have a $1,000 credit card, I need for you every month to keep that credit card at $300 or less. If you keep it at $300 or less and you pay your payment month after month, I promise you, I could go on record today saying that if you do this, your credit score will move exponentially. And the more you do it, the more your credit report will move. So those of you who have credit cards, you got to get those things paid down. Get them paid down. You don't have to pay them off. You need to pay them down beneath 30% and just pay on them. Because what's going to happen in this building your credit picture really strong and fast. I've got people that I've helped do it. Man, I'm telling you, my brother Stacy, he can attest to it. I helped him and his score jumped tremendously. And he was able to purchase a house for me. So I'm telling you, it works. So monitor your revolving credit. I'm telling you, this is the way that your score will rise. Now, if you don't have a credit card, contrary to what everybody else says, you can have a credit card. If you don't have the credit right now to apply for one and be approved, every bank has what we call, this is what they're called, your own credit card. You create your credit card by going in and getting a secured credit card. It means your money secures your credit card for you, and you pay it just like it's not your money, and they report it to the credit bureaus. What that does is help you build revolving credit. Now, I'm going to tell you, don't you do that if you need that money. Because if you open that secured credit line and you go to the bank the next day and get all your money back out, it's going to hurt you more than help you. So it has to be money that you do not need right away. It has to be money that you can set aside and then pay it down to 30% or below and let your money work for you. That's why we make money. We make money for it to work for us. So revolving credit is important. The greatest way for your credit score to rise is revolving credit. You have to have some revolving credit. And then those of you who always tell me, well, I don't do credit cards. Well, you need credit cards in order to build your credit. Now, I'm not saying that you go out and get all these lavish credit cards and just max them out. Use the credit card for your benefit. Don't go on vacation with your credit card. Don't go to Saks Fifth Avenue and max out your credit card. Use your credit card to build your credit so you can buy a house. You have to be strategic in this day. You have to be strategic in this time and learn what works. So I'm telling you, if you have installment accounts, if you have credit accounts, keep them current. But most importantly, those revolving accounts, those credit cards, man, credit card does not have to be our enemy. Credit cards can be our allies. I'll say that again. Credit cards do not have to be our enemies. They can be our allies in getting us to the place where our credit is strong and we can purchase homes. I'm telling you, man, credit is important. So this is going to end my piece on credit. Next week, I'll talk about assets, the money that it takes to purchase homes. But I'm telling you, if you need any more advice, call me, reach out to me, inbox me, and I'm going to transition next week. So I need all of y'all to do this. I need everybody that you know to share this video with who they know and to like my video and share it and go to my business page and like my business page. Because what I'm about to do, I'm about to transfer these videos to my business page. Yes, I'm about to transfer these live videos to my business page. But also I'm about to create a YouTube page. So you can go back and read these, listen to these videos and learn and take notes. So, but today I want you to know that it's never too late for credit. It's never too late for credit. Never too late to manage what you have. It's never too late to build from nothing. I've seen people have no credit and go to 700 in 6 months. So with that being said, I want to thank everybody for tuning in to my videos. Hey, like my videos. Hey, share my videos. Like my business page. Give me some feedback. I'm telling you, I'm out here forever. This is what I do. I will be doing this until I leave the earth. So I'm here for you. And in 2017, I'm telling you guys, write it down, write the date down that I said it. I will be the greatest real estate agent in the state of Georgia. I'm looking for you, buyers, sellers, developers, investors. Everybody, come see me. I got the knowledge. I'm telling you, 2017 will be the year. Following 2017, we're taking over the real estate. We're creating wealth for you. And in return, you're going to be blessed. I'm going to be blessed. And we're all going to live the great life. So watch for me this weekend. You know I have this contest going on. On Monday when I post a video, if you can tell me where we were at this weekend, you could win a dinner for two, a movie for two. I don't know where I would be. No telling about us, but watch us. Follow us. And then Monday, I want you to share my video, like my business page, and tell me where it was that I was with my wife this weekend. I'm telling you, I'm going to pay you. I'm going to meet you. I'm going to give you, I'm going to bless you. All I want you to do is take advantage of this information. This is 18 years of information that I am allowing you to have on Facebook. My family, my friends. Man, I'm telling you, man, it is a great America. You know why? Because real estate is great in America, again, because of me. Yes, that's right. And because of you. Man, God bless buyers, God bless sellers, God bless investors, God bless real estate, and God bless these United States of America. What a great place to live in when we can do what we love to do and nobody has a problem with it. Hey, call me. Reach out to me. I want to sell your house today. I want to sell your house today. Man, whatever it is, I got you. Call me today and we can make things happen in your life. Creating wealth is what I do. Selling houses is what I do. Buying houses is what I do. Representing you is what I do. Let me tell you, no one would go to court without a lawyer. So why would you buy a house without a real estate agent? Man, you wouldn't get a lawyer fresh out of law school. You would want somebody with some tenure. I am that guy. Don't ever buy a house without representation. I will represent you. Hey, this is Cedric Follins. I'm signing off. I got to get started on my day, man. It's a beautiful day. I've got clients to meet, properties to preview. Hey, man, I got this great deal coming in Stone Mountain. It's a burnout. We got it for a great price. If you're an investor and you're looking for a great deal, stay tuned. I'm going to bring it to you. Hey, man, I love everybody. Have a great, peaceful, and joyous day.